Good morning, everyone. Once again, this is Black Forest coming in with another market analysis video. This morning, we're going to be looking at the USDCHF. But before we get started to break down this Forex pair, we have to state that this video is for educational purposes only. This is not financial advice. But we all know why you guys are here. You guys are here to find good, credible Forex content that can help improve your abilities as a trader and help put a little bit of money in your extra and hopefully put a little bit extra money in your pocket, especially in these times in America with inflation and prices being so high. Okay. Now, with that said, let's go ahead and break down this Forex pair. Now, first thing that we always do before we get started with our videos is we talk about what's fundamentally going on with each currency before we get to break it down what's going on the charts. Okay. Now, first thing that is going on, let's talk about the CHF. The CHF, the Swiss franc, also known as the CHF, also known as the Swiss franc. It has been one of our weaker currencies for several trading weeks, and there's a couple factors contributing to that. First off, that there is inflation surrounding the economy. Um, that uses the Swiss franc as a currency because basically Europe has basically entire continental inflation hanging over its entire continent. Really is it's really a global inflation, but there's a lot of inflation hanging over the entire European economy and entire European continent's economy right now. And being that this country is in Europe, it also has that inherited inflation as well. Okay. Also, Switzerland is one of the countries that decided to um, put sanctions against Russia for its invasion of Ukraine. And those sanctions that they thought were going to hurt Russia is now hurting the other European countries that placed the sanctions against Russia because Russia was made one of its major trading partners. And European nations, for you guys that don't know, many of them do not produce a lot of raw goods. They even have to get their raw goods from countries from the East, or they have to get their raw goods from Russia, or they have to get their raw goods from Africa. And being that Russia is cheaper for them to get their raw goods without having to pay exporting, importing fees and tariffs, you could just drive a truck from Russia to Switzerland. Okay. But being that they put those sanctions on Russia, it has de facto caused their own prices on raw goods and materials to go up, which is also furthering the European continent's inflation as well. Okay. And then also that we have destabilization of the entire European economy due to the Russian-Ukrainian war. That's starting to look like there is no end in sight on that. They're really fighting like cats and dogs over there. One minute they're having peace talks for ceasefires, the next thing you know, you get news reports saying about how aggressive the Russian army is pushing into Ukraine. And you got news reports coming out about the Ukrainian government. It's basically, you know, basically fighting like crazy to try to keep their sovereignty. So until we get a ceasefire or at least, reports of very positive peace talks, we're going to see a decline in European currencies until this happens. Now, CHF, JPY, and the euro are the major three European currencies. So we're going to still continue to see weakness with these three currencies until we have some type of peace talks in place or a treaty in place that will stop the aggression on the Russian Ukrainian between Russia and Ukraine, which will give more stabilization to the entire European continent business outlook as a whole. Okay. Now with the USD, we got a couple things going on with that. Last week, well, the latter part of the trading week, we did get some poor economic news come out about the USD, but we're going to be paying attention to what is happening today because around 10 o'clock we got some news coming out. And also we have to be paying attention to impromptu news too because we're starting to get a lot of reports from the Federal Reserve from a gentleman named Powell, who's the chair of the Federal Reserve, who is stating that they're going to do everything they can to combat inflation because of how high the prices are getting, and also there's news reports that come out that they're going to be sending Americans stimulus money to help combat these high gas prices as well. So they're going to be sending out money to American citizens so they can use it to help buy gas due to how high these gas prices are getting. Where I'm at in Mid Atlantic, we are pushing about $4 to 50 cents, but you have some places like in the West Coast, they're in like the mid $7, looking north of 8. Okay. So these are things that's going to be affecting each currency respectively. All right. And then one thing we're going to have to pay attention to the USD is to see how these economic measures in place are actually affecting combat its inflation. Okay. Because if the economic measures or the increase in the interest rate does not combat the inflation very fast and very aggressively, then we're going to be in a situation where people are going to start to lose their faith in it. And you'll start to have FUD around the USD, which is fear, uncertainty, and doubt. And it will continue to drop and lose. It will continue to lose strength and become much weaker than it is. But if we are in a situation that the economic policies and increase in the interest rate is actually combating the inflation very fast and very aggressively, then we're going to be in a situation where we should see that the USD should pick up strength very aggressively in a short period of time. Okay. Now let's go ahead and break down the technical analysis of what's going on with the USDCHF. Okay. So as we can see, we've been kind of in a range with breaks in the range for some time. Then we kind of stayed really within the range once we got to October, somewhat breaking between these two price points that you see highlighted by red lines. Okay. Then over since the beginning of the new year, 2022. We've been also staying between the red lines with having slight breaks in the range towards the top extreme and towards the top extreme and bottom low extreme. And then we eventually broke out of this range. Now, this is the same situation still into the USD and JPY. We're not dealing with which currency is actually stronger than the other that's moving the chart to either a long position or short position. What we are looking at is basically which currency is much weaker than the other. Okay, that's the situation that we're in. Okay, now this one deciding factor or reason why even though the USD has been one of our weaker currencies for several trading weeks, but it is showing strength against the CHF is because the CHF is much weaker to the USD just due to the destabilization of the entire European economy from the war that's being fought on the European continent, which is the conflict between Russia and Ukraine. Okay. So this is why we had this break up towards this side, okay? And we did have some retracement strength on CHF's part. And now we're in a situation where basically we're looking like we're going to continue to go back up towards the long position, okay? So like I said yesterday, in yesterday's video, we did come down some to this area here. And now we're looking like we're starting to head back up to the long position, okay? So for the long term, it looks like we're going to be heading towards a long position. Now, the only thing that can change this is if we have a drastic shift in our fundamentals in which the USD becomes much weaker than the CHF, then we will have definitely the chart heading towards the downside. But with all the news that's surrounding the USD and the uncertainty and with the European conflict and with with the European what the Switzerland is going to do to combat its own inflation and how to deal with the negative ripple effect of the Russian sanctions, we're more so looking at the greater probability of continuing towards the long side. So we may start to go up to this area here before we start getting a little shaky again and ranging out and coming down before we start to continue to go up. Okay. Now, is there a possibility we could have a shift turnover, the whole turn or price turnover? Yeah, that is the possibility, but the thing about it is we'll have to see a dramatic shift in the fundamentals. And being that at this current point, what is being said about the USD and combat inflation, and them taking and the American government taking a very strong stance about this from an economic policy standpoint, and they're going to be releasing, say they're going to be releasing funds in the form of stimulus to increase, to give Americans more money to spend at the gas pump. This is mostly looking like fundamentally we'll still be going towards a long position, which is being represented by here with this high low, and we're looking like we're about to continue to go up to make our next high. Okay? Hope that information was helpful for you guys. Happy trading.